All right, what's up, tycoons? What's up, traders? For today's video, we're going to take a look at XYO network. Go ahead and give you guys an update. In the last video, we went over the current pattern that we had forming, and we were looking to see if we were going to get a breakout to the upside or a breakdown to the downside. We also went over our three major retracement levels that we really needed to break through if we were going to get this breakout to the upside. We can take a look at the MACD as well as our RSI for, a couple signals and a couple clues as to what the price action is doing and really help better understand the price action. So we're going to break all of that down in this video today. Make sure to smash that like button, subscribe to the channel if you guys are new, and we're going to jump straight into it. So the reason we look at these three levels is because these are the three most common and well-respected retracement levels. These are the 61.8, the 50%, and the 38.2% levels. Now, we recently had this very strong move, okay, from like 3 cents all the way up to about 8 cents. And afterwards, we started to pull back, right? We pulled back, we established a little bit of a demand zone here. That's what this green box is going to be. This is going to be an area of support we're going to pay attention to now. And we started to rally, but look at what we did, okay? If we draw our line over, we rejected our 61.8% retracement level. So, nothing moves in a straight line down or in a straight line up. Rather, you get a move down, retracement, continuation of the trend, or move up, retracement, continuation of the trend. So, obviously we had a really strong breakout to the upside and we started to pull back. And if we can break above these three levels, these are going to be the retracement levels, right? We could possibly continue that trend, back downwards, but you can also use these to spot reversals, right? So if you move down, retrace, consolidate, and then break through those retracement levels, then that's how you can spot a potential, upside reversal. And that's what we're looking for here to see if we were going to be able to break out past our previous high and put in a new higher high on XYO. But unfortunately, that wasn't the case, right? We rejected the 61.8. Then we came over here, rejected the 50%. And even here more recently, we rejected the 38.2% retracement level. So, we're still pretty much bearish below these three levels. We also had this chart pattern, and this is more of a symmetrical pattern, so it can go bullish, right? Or it can go bearish. Now, what we did was we actually just recently got a clean breakdown below, and then you can see here on the daily chart, we opened up just underneath that trend line, and we're starting to push lower. So this leads me to believe that most likely we're going to come in here and test this prior demand zone that we had, basically right around 5 cents a token. All right, so most likely that's going to be a scenario. Now we could get a breakdown retest and then we come down to this level and see what we're going to do here, or we could get a look below and fail. All right, so a look below and fail would be where sellers were presented the opportunity to really push price lower. Okay, but instead, rather they failed, and bulls showed that they were still present in the market and actually pushed things back into our range. If that happens, most likely we're going to end up seeing it head towards the top of the range and retest some of our prior retracement levels that we've been testing and rejecting really periodically, right? First the 61, then the 50, then the 38. So besides that, okay, we can also look at the MACD and the RSI to help get a little bit of clues. So initially what helped start and really spark this rally was something known as bullish divergence, where we had a low here and then a lower low on the price of the token. So clearly it's in a downtrend, right? But here we have a low and then a higher low. So while we were going down in price, we were actually increasing in relative strength. That's what your RSI is going to measure, the relative strength of a token at its given price. So we actually increased in relative strength as the price went lower and tested our support level here, and we got a very strong move to the upside. Now you can use the MACD, okay, for possible entries and exits. So it did give a good entry signal, back over here, but we can see that right around here we got an exit signal. So if you take a look at where that's at, boom, we've had a nice little move to the downside, right, from just under 7 cents to now about 0.005643, right in that range. Okay. So, we had the opportunity to cross back above right over in here. And if we would have crossed above, that could have been an entry signal. All right. But rather, we got a look above and fail. Okay. Just how I was talking about look below and fail right here. We got to look above and fail. We rejected our 50% retracement level at this time, and then it curled back down and it's continued heading downwards ever since then. And that's what we're seeing the price action do as well. So for now, things are leaning towards more bearish. But what you can look for, okay, is not only this demand zone right here as a potential bounce zone, and I've been saying 5 cents and stuff like that, but it's 0.005. All right, so not exactly 5 cents, but you know that's the number you're looking for. 0.005 is really going to be kind of like that range that we're looking for it to come down to test. But we also have the initial bullish divergence trend line we could bounce off. Right, we bounced here once, we bounced here twice. And then if we come down and test this level and get another bounce, this could be a good area to look for a potential bounce. Now, if we come through and break through this level right here, most likely we're going to end up breaking through our demand zone and retest some of our previous lows that we were trading at before. Okay. So, you know, this thing has had a massive rally as of here recently. It started off the year super strong. And since the year has started, it's really just cooled off and consolidated and moved sideways. You know, so we're going to look to see if we can get a bounce off of the initial bullish divergence trend line. If we come down here and test this level, this could be a potential double bottom, right? So there's a few things that could happen here. All right, as well as the look below and fail. That's definitely a possibility. So keep an eye on XYO. Be patient, wait for some signals. Okay, you don't have to really try to force any trades when there's not really an opportunity. And let the trades come to you, let the setups come to you, and look for some of the different setups that I went over in this video. Of course, this video is not financial advice, but rather I'm just trying to go over a couple different strategies, give you guys an update on the current price action, what we're seeing, and teach you guys a little bit about how to use the RSI for some divergences, as well as how to use the MACD and the Fibonacci levels. So smash that like button, subscribe to the channel if you guys are new, and I'm out.